and gentlemen, we are continuing our plenary sessions for the second day of the annual investment meeting, and our plenary session is about sovereign wealth and private equity funds and sustainable investment strategies. I would like to introduce our moderator for this session, Mr. Douglas Wadenberg from Netherlands, CEO of Investment Consulting Associates.
Thank you. Welcome, everyone. We have the pleasure to moderate and host the session right after lunch. So this is going to be an exciting one, and we're going to make some interesting comments and remarks by the panelists. We have 1 hour, so we need to be very effective. This session aims to better understand how sovereign wealth funds and private equity incorporate sustainability in their investment strategies. And sustainability, in our perspective, and I think many of the panelists share that perspective, is not only about green energy, solar energy, it's a broader issue. Sustainability relates to the longer term economic development of nations, of companies. So it also relates to social issues, to safety issues, to develop something that is much more long term than we previously have been able to do so. So taking that more broader perspective, you will realize that also from this perspective, the perspective of sovereign wealth funds or private equity, it will be much more interesting to see how they incorporate this element into their investment strategies. We have a very good panel, as I mentioned. I would like to start the panel with Mr. Michael Maduell. He's the president of Sovereign Wealth Fund Institute based in the United States. And I would like him to kick off and ask him the question, the investor's perspective. What kind of deals and how does sustainability come back into the practice that you see among sovereign wealth funds, among your clients and members?
First, I want to thank the host for this excellent conference. The perspective that I bring is from the investor side of things and where they allocate capital. As you know, the Sovereign Wealth Fund Institute tracks sovereign funds pension activity globally, and we track fund flow data as well as transactional data. When it comes to sustainability, private equity, and sovereign wealth funds, there's been a shift towards the attitude of sustainable investing. It has once become a thing for US pensions and Swedish buffer funds, but now it's also becoming something where a lot of sovereign wealth funds in the Gulf and even parts of Asia are taking seriously, because the concept of sustainability, it's a very broad term, but the sort of tenets of it can impact financials. So for example, if you're an oil and gas company and you didn't have a clear policy in place where sustainable investments were happening, you'd always take a very big hit. And so a lot of the investors that were investing in oil and gas industries at one time was doing great, but in recent times haven't fared so well. So when it comes to sustainability and environmental and renewable assets, there's a broad range of investor behaviors. So the larger Gulf sovereign wealth funds, the Canadian pensions like OMERS, PSP Investments, CPPIB, they are very active in renewable energy investments. So they'll go out, they will partner with a local developer, they will also go out and buy a portfolio of assets that already have power purchase agreements, PPAs, or they will create companies or investment platforms to harvest those kinds of transactions. For example, Greenco Energy, which is a renewable firm that has operations in India. It's basically owned by Singapore's GIC Private Limited, one of Singapore's sovereign funds, and the Abu Dhabi Investment Authority. And that vehicle goes out and buys and sells and invests in solar energy projects within India. Another example of renewable energy would also be the CPPIB re-upping its investment into Renew Power, another Indian solar company. So whether the spectrum is sustainable investing, renewable investing, sovereign funds are taking a very large stance on that. And one more point to add before I shift over is that if you're talking about sustainability from an investment policy standpoint, Norway's sovereign wealth fund is very well documented, very well reported in the media. They actually participate in proxy votes. They try to get their point across and influence corporate boards. But I'll leave my comments to that for now.
Yeah. Thank you, Michael. And I do have some other questions, but I'd like to give the floor to the other panelists as well. Mr. Nick Ayton, you are in the world of cryptocurrencies. You are a person what we may call a crypto evangelist. And your companies like ChainStarter try to create the infrastructure for cryptocurrencies, but also to involve sovereign wealth funds as well. How do these new tokens invest in sustainability or in sustainable development goals? And are the traditional investment routes able to do so as well?
Well, there's a lot in there in that question, and we could fill the whole conference up with that probably. But the thing that we're trying to do is we're trying to create a set of infrastructure around blockchain, cryptocurrencies that give the traditional investment community the confidence that it needs to bring capital in. There's a huge perception problem of crypto that it is highly volatile, but there's a huge negative perception out there, and we have to convince the funds and the high net worth individuals that we can deliver a range of financial products engineered around this thing called a token, which I'll show you, which I spoke about this morning. So you have this concept called a token, and basically in crypto world you can program that to be a store of value any way you like. You can make it look like a convertible note, a bond, an equity. You can engineer these things in an entirely different way. So when you create these stores of value, and you're doing the right checks and balances, and you're doing the right investment memorandums and creating a proposition with all the right checks and balances, then it gives the investment community the confidence to want to get involved. And that's how we're going to make crypto sustainable, by getting the big institutional investors to feel comfortable.
Mm-hmm. But in your view, is the infrastructure in place already?
Well, the infrastructure isn't in place, no, because if this was an opera, if the whole crypto revolution was an opera, we're in Act 1, Scene 2. So it's very early days. The infrastructure is exchanges, crypto exchanges, where you can buy and sell your crypto. We have an ICO platform, so we can help new opportunities generate investment capital. And we're also a little bit into television as well. But the whole point is that infrastructure is emerging, but it's early days. And in particular, we look for projects and opportunities where there is a massive social impact. To the earlier speaker's point, we're looking for things that deliver a sustainable impact as an investment opportunity.
Thank you, Nick. Dr. Fatima Al Arabi, you're the founder of Alaf Capital in Switzerland. You've earned a reputation over the years as a thought leader in global wealth management and Islamic finance. If you look at sustainability from an Islamic finance perspective, what do you see as the relationship between the two of them?
Thank you for this question. It's really music to my ears because, everybody now talks about socially responsible investments, ESG, environment, and social governance. And Islamic finance is all about social responsible investment and ESG. I will not go into the details of the Islamic finance, but if we take the main guidelines, if you talk, first of all, about, we're talking about sustainable investment. So we talk about the usury part. We talk about, the transparency and the symmetry of information, which is one of the prerequisites of the Islamic finance. So here, now we are going into an era of blockchain and complete transparency. Nothing is hidden anymore. And when they asked our Prophet, peace be upon him, they asked him, what will not be known? He said, what never happened. And this is exactly the time where everything will be known. But Islamic finance, Sharia compliant, advocated for that years ago, when one of the prerequisites is the symmetry of information. You cannot have advantage and more information than the one who's buying from you. Another, we can go into, I can talk for hours about Islamic finance, but I know we don't have the time. So if we take the main guidelines, another very important aspect is the debt to equity ratio. So companies, if they, of course, we have to take the activity of the company, which has to be, socially responsible activities, so we stay away from weaponry, we stay away from gambling, we stay away from other similar activities. So if you take, another prerequisite is the debt to equity ratio. And companies should not have a debt to equity ratio that is higher than 33%. And if you think about it, this feature by itself gives a lot of stability to the companies. And the direction now of major and you know, this prestige sovereign wealth fund, like if we take the Norwegian one, they are going into that direction requesting that some of the companies don't have excessive leverage. So it's Islamic and it's Sharia compliance in its pure essence. Now, don't forget that that was a code of ethics during the days of the Prophet, and now it's evolving, and the private sovereign wealth funds and private equity funds, you know, are going into that route as well by not investing in companies that use child labor, for instance, by not investing in companies that produce weapons. Okay, they even go as far as companies that use bleach to bleach the ships in the sea. They don't want to invest in them because they damage the environment. So you see more and more consciousness. Corporates don't have hearts, but corporates do have conscience. I hope that in 2030, if we meet again in such an event, we will see that the corporates will have a conscience and that they have to contribute to the society by I mentioned this morning and I love it, by, yes, of course, they will always have the maximization of shareholders' profit at the first and foremost goal, but then they should also look at the society and say, okay, I am, for instance, the Norwegian Sovereign Wealth Fund. Today I have 1 trillion under management. By 2020, the sovereign wealth funds combined are expected to have something like 15 trillion under management, which is higher than the first economy worldwide. So yes, they have a bargaining power, and they have all the tools to change and direct the companies into going into these, you know, financial balance sheets and ethical balance sheets, where they will look at, you know, contribution to the environment, child labor, education, gender diversity, and all the other topics.
Thank you, Fatima, for that interesting perspective. Mr. Ahmed Al Qassim, you're the CEO of Emirates NBD Capital. I think what you've probably just heard from the other panelists, in your world of private equity, how do you see sustainability come back in investment strategies anticipated by some of your clients? What's the approach they're taking?
I think one thing to mention, we are a regional investment bank. Our deal flow is very regional. Our investors are regional.
Please use the microphone.
Okay.
Thank you.
As Emirates NBD Capital, we're a regional investment bank, so we cover investors, opportunities, private equity houses here in the region itself, starting from the UAE, going to Egypt, and then Asia, and parts of Africa. I think sustainability today is important on every person's agenda, every corporation's agenda. We have seen it at the sovereign level as well, where we have seen the concept of green bonds, green sukuk come into play. A lot of the Islamic sovereigns today who are predominantly raising capital in a sukuk format are looking at green sukuks. And there is appetite for that from both the conventional and Islamic investors. I think one thing to mention as well, there are a lot of pockets of capital in the region that focuses on sustainability and green per se as well. There's the Masdar Clean Tech Fund that was established. We've got entities in the region who focus on sustainability, waste to energy, recycling, and so forth. I think one thing to note, though, a lot of the private equity houses that are there in the region don't have a green fund per se. They would invest in sustainability as an opportunity, but they don't have a fund that is labeled green or labeled sustainable. So I think that's one area that potentially there'll be growth in. We've seen companies in the region who target sustainability, but have not come to the radar of private equity houses. I think as we focus on sustainability, sovereigns focus on that, you will see that translate into pipeline for some of the private equity houses.
Thank you, Ahmed. Mr. Fahad, you're the founder and partner of TechInvest in Kuwait, TechInvest was founded in 2015. To what extent do you see sustainability? What's your view on the on this topic from what you've done in your career and recently with TechInvest? Is there some misunderstanding about how sovereign wealth funds deploy capital? Can you explain this further?
Yes. Very interesting question. I think the sovereign wealth funds have displayed a change of heart in the past couple of years. Now they're a little bit less risk averse, and they're going into venture capital and growth private equity. And that's because they noticed that they need to deploy into this early stage as far as they're concerned, because they need to cover these great growth opportunities. And whether it's Kuwait, Abu Dhabi, even the Saudis now have deployed over 72 billion in U.S. Private equity and venture capital. Most notably the Saudi investment in Uber, et cetera. And so, for sustainability's sake, the previous model was to invest in real estate, invest in public equities, and after the subprime problem in 2008, and after the crashes of some of the regional public markets, they realized that they should really diversify their portfolio. And they do have hundreds of billions in dry powder, today, collectively, there's over $1 trillion between private equity and venture capital that's dry, haven't been invested yet or deployed. And then the sovereign wealth funds themselves have billions of dry powder. And so the best way to do now is to go at an earlier stage and try to catch these companies in their growth. And I think that is something that's been very clear in the attitude of the sovereign wealth funds in the past couple of years.
Okay, thank you. Michael, question to you. What do you see as the future trends for sovereign wealth funds and sustainability?
There's many ways to cut that. When it comes to sustainability in terms of investment policy, meaning affecting change on corporate boards, I think that's becoming a much stronger case now. So for example, 5, 6, 7 years ago, a lot of sovereign wealth funds were taking large stakes in companies and not taking board seats. Well, that attitude has changed now. The world's more comfortable with the word sovereign wealth fund, and people want their capital. So that's something that we've definitely seen, that there's more of an active participation on corporate boards. And Norway, the Norway government pension fund Global, that's the $1 trillion Norwegian sovereign wealth fund. They've kind of taken the lead on that. And just saying also that other large institutional houses are looking at sustainability changes. I mean, I'm talking to my clients in Japan, and Japan, they have the stewardship code. Major changes are happening. A lot of the Japanese pension funds and insurance funds are going into equities, and that's having an impact on sustainability practices within that corporate system.
Thank you, Michael. Any one of the panelists wants to comment on one of the comments that the other panelists made at this stage?
I do, actually.
Yes, please.
I have a question to Ayton. Hi. So, because we're talking about sustainability and sovereign wealth funds and, the contribution to the society and the environment, when you took out the coin, and to my knowledge, if you take, for instance, the transactions of a Visa card per year, they consume as much energy as 50,000 households, okay? Now, if you take the transaction of cryptocurrencies for the same period, which is 1 year, they consume the energy, the equivalent of 1.5 million households, or Jordan, or 5% of UK consumption. How is that going to be sustainable in the future?
Oh, that's a good question, actually. I mean, cryptocurrency in its current form is very energy inefficient. The Bitcoin network by itself consumes the equivalent power of Ireland. And to generate one Bitcoin is $1,000 in power. And then, of course, the rest of the value is what you decide the value is going to be. There are lots of moves now to moving mining, which is the process by creating these cryptocurrencies inside the Arctic Circle. A lot of them are solar-driven now. We've got an investment where we're looking at hydropower to cut out the need for them to be connected to a conventional grid. So I think it's a fair question. I think that the industry of crypto has to do a lot more, as other industries do, to be more fuel efficient. But at the same time, we're using crypto as a source of capital for projects that, in our view, wouldn't normally get invested in by the investment community. For example, we've got one project which is a carbon offset project, which is a mobile app, and as an individual you can choose to offset the cost of that cup of coffee, the carbon offset. And it's something that can become a global movement because people are, for example, not convinced that governments are doing enough. They don't see the data can be manipulated, but if you put everything on the blockchain, of course, then it's more transparent. As Fatima said, that's the big game changer. So in terms of renewable energy, sustainability, the crypto industry's got a long way to go. And we are conscious, we are evangelists, and we're conscious of that problem, and we are working at it.
Thank you, Fatima and Nick, for that question and good response. One of the questions I think that resembles with the audience also here is that what we've seen over the last 10 to 15 years in terms of sustainability, that 20 years ago, many of the corporates, big multinationals, started coming up with environmental annual reports, corporate social responsibility reports, and many of the people were saying, that's all fine, but it's literally also a waste of paper because there's a lot of window dressing. I'm slightly exaggerating here. To what extent do we see still that window dressing taking place of many of the corporates that sort of have a sustainable policy, or is it something real, is it something tangible? One of the comments that I've heard from some of our clients is that they're saying sustainability is fine, but we always take a bottom line approach to our investments. It needs to be profitable. Any of the panelists would like to comment on that?
They are not mutually exclusive. You know, like corporate profitability and sustainability are not mutually exclusive. You can have both. You know, you can achieve, it's always, corporates will always have the aim, and which is very understandable, of maximizing shareholders' profit, you know. But again, on the other hand, corporates have, you know, going into 2030, going in the future where there will be a lot of digitization, artificial intelligence. You will have a lot of robots in your house, walking around, doing all the chores, never complaining, 24 hours. You know, 62 billion every year is lost in bad customer service, which could be completely, you know, this could be eliminated by 24-hour service because, you know, they can go above and beyond to offer better services. So you can always preserve the shareholders' interest, maximize their profits, you know, name it. But on the other hand, you can go into sustainability by ensuring the well-being of your employees. You know, I don't know, maybe some kind of implant where in the morning they can check and they can see in the mirror immediately that their cognitive aptitude is less today because they slept less hours, so they should take this or do that, you know. Extravagant things that will happen in the future, whether we want it or we don't want it, and I think that we should want it because it's going to be quite positive. Companies looking at the number of their officials traveling and saying, okay, wait a minute, now there is no need to, you know, to have more carbon emissions in nature and use more flights where you can have 5 meetings at the same time in different locations of the world. So I strongly think that they are not mutually exclusive.
Okay, thank you. Fatima, Ahmed, you represent many private equity, or your firm represents many private equity clients. what do you see? What's your view from their perspective, taking a bottom line approach? Yes.
Sorry. So I think from investor point of view, the investors we work with, unless it's a fund or it's an institution that is mandated to invest in a either socially responsible or clean or Islamic, most of the investors we work with, they look mainly at the returns. So you'd always be compared with real estate returns, dividend yields, and so on. So there is this separation between investors who only look at clean investments or sustainable versus those who look at it from a pure return perspective. So we haven't seen investors come to us say that we will only do private equity if it's green, or we will only invest in this company because it is socially responsible. Most of the investors we work with look at the returns. If being green adds to that bottom line, makes it more, makes the returns look better or improves that, then you would see that shift.
Okay, thank you, Ahmed. Any of the panelists can share a sort of best practice, for lack of a better term, example where you can see how this has been incorporated, hasn't been enforced upon from above, but examples of where private equity or sovereign wealth funds have been able to incorporate sustainability elements or successful investment strategies.
I've seen a lot of, talking about real estate, a lot of sovereign wealth funds and pensions are having their buildings have LEED standards, so that increases energy efficiency. You don't have to, use the AC so much. There's some sovereign wealth funds in Oman backing a company called Glass Point. Basically, you have like solar tint and there's ways to make it more energy efficient. So for real estate, that's really practical and measurable. It can produce a ROI that would be higher than a non-LEED building. But back to the point of sustainability, it's really hard to measure these things. Some things like real estate are very easy to measure, but in other instances, it's a more challenging process. So if anyone can figure out a real numerical way to figure this out, they'll be very wealthy.
Okay, so what you're saying is also that we need to find new performance metrics
Yeah, I mean, just being more granular, and then every industry is different. So, if you're a coal company, well, then you're pretty much done, right? If you are like a tech company, well, maybe you can put some, plug it into some solar panels or wind farms.
Okay.
If I may add, I totally agree with you. I mean, everything is quantifiable. So why not quantify the contribution to the society in ratios and KPIs and economic indicators like we do with the financial balance sheets? So there is a return on equity, there should be a return on ethics, there is a return on investment. Why not a return on improvement, for instance? If anyone could help with more ratios, why not have like a total new KPIs that quantify these improvements?
Thank you. Mr. Joao Vasconcelos, you're the Senior Advisor for Clearwater International from Portugal. You've been listening to the other panelists. Can you share some of your experiences and perhaps some of the examples you have from your practice, please?
Thank you. Sorry for my delay. I'm at Clearwater. Clearwater International is an M&A company focused on middle market, mainly industry. And that's an experience. And the other experience, it was like as a former Secretary of State for Industry, managing the public funds of my country. And I would like to tell you about the two different experiences. The private funds, obviously, like my previous speaker said, they look for return, and they deserve the return, and unless they invest specifically in green energies or others. But where we can make a big difference and faster, it's with the public money. When we are investing the public money, we should lead these sustainable objectives as our priority. And the public money should give the example that it's possible to have return with impact. The same thing we try it, for example, with excellent results on entrepreneurship. So early stage capital, growth capital for science and tech-based companies, high risk investments. The return is very rare to be positive in Europe, continental Europe. Obviously you need public money to do that, and it's got an impact, enormous impact on a generation and entrepreneurs and startups and everything. And we are doing the same in Africa and the Portuguese-speaking language countries like Mozambique, where with the public funds, we only do investments with high social and environmental impact. Forest, infrastructures, renewables, and that's a focus because obviously the public money, we don't have the same greed as the private money, and we don't need the same return. So I think if we test it with the public money, probably it's better for private funds to follow.
So what you're, thank you for that. So what you're actually saying that if you look at the differences between private funding or public funding, you would see differences in performance criteria, return on investments, and in your view, that's probably the only way to incorporate sustainability?
It's not the only way, but it's a good way to start if you are not doing it yet. At Portugal, we started with small funds of 400 million, 500 million to specific projects in Africa, and we learned how to do it. And some went well, some went wrong for several reasons, but all them had an enormous amount of impact because they were all developed with the local communities, with the local governments, and it worked. I think the majority of the money, it's not focused on that. It's not focused on that kind of impact. But I believe that in the future, having a social impact, respecting the sustainable objectives, it's possible with having a very high return result.
Okay, thank you, Joao. Nick, may I ask you a question? If you hear this, what do you think that's also possible to differentiate returns on investment also with cryptocurrencies? Fahad, I'll give you a chance to answer next.
Look, I got a comment on the previous couple of comments, really, is that, you know, what we all want as investors is the evidence or the proof that people are delivering on their responsibilities. So, you know, if you're an organization, you have a CSR policy, well, generally speaking, it's very difficult to measure it. Yeah, okay, maybe you can get the data, but do you believe the data? Has it been manipulated? Has it been, you know, tarted up a bit to make it look better than it is? So I agree with Fatima 100% that the ethical balance sheet, which is proven, where the organization is almost forced to account for itself and prove what it's doing, is essential. You know, and that's the underlying thing, is the evidence that we all want to trust that it hasn't been tampered with and manipulated. So that's really the bit that the crypto blockchain world brings into this, is the truth part of it. It is what it is.
Yeah. Thank you. Fahad, please.
I found some of the comments very interesting about the sovereign wealth fund's approach to sustainability, but it's the whole genesis, the whole thesis of sovereign wealth funds is to ensure sustainability to the future generations in the first place. And you know, when sovereign wealth funds, their investment horizon is literally infinity, right? They don't need to give out dividends. They don't need the LPs to look at, you know, exits. And so they have a different perspective on investments, and they have a 2-decade, 3-decade investment horizon at minimum. And so, and the whole point is to offset their dependency on whatever is the GDP now for the future. So for example, let's take the Kuwaiti or the Abu Dhabi investment authorities. Their whole point is to invest the capital that's coming from the oil into other businesses so that when the oil becomes obsolete or relevant, they have some sort of cash to sustain their existence. And so the whole point of a sovereign wealth fund is actually sustainability in the first place. Now, if we look at sustainability with the current definition of sustainability, which is being environmentally friendly and taking care of Earth in a social responsible way, some of the sovereign wealth funds now are looking at assets in the aquaculture, agriculture, agrotech space, so that they're investing in food development and finding food alternatives. There's not enough cows to feed everybody in the world, right? Eventually, we're going to run out of meat. And not just that, the cows are killing the ozone anyway. There's just too many cows, right? And the gas is produced. So we need to find alternative ways, and that's what the sovereign wealth funds are actually, when I say invest in the early stage, they're investing in, I know for a fact there's an agro-tech fund that just invests in agricultural products that can be harvested in the desert, with very low water and very low fertilizer. And that is environmentally friendly. So whether if it's directly or indirectly, it is all about sustainability in some format. And the sovereign wealth funds actually have these programs, different names and different groups, but they have been actually focusing on that.
Thank you, Fahad. This may sound like a more general question, but one of the questions that I've heard actually over the past 2 days being here at AIM in Dubai is what would be, and it may be very general as I mentioned, what would be the challenges or stumbling blocks for private equity and sovereign wealth funds from a broad perspective in terms of investing into sustainability? We've covered a few of them. Yes, Fatima, briefly? Yes.
May I?
Yes.
Okay, so the sovereign wealth funds in general, if I can sum it up, priorities are mainly three. The stabilization of the economy, and this is where they intervene when there is like a crisis. The economic development, and this is where I agree with Fahad about the long term and the infinity time horizon. And and maximization of the capital. So with these three priorities, and for the sovereign wealth funds and for the private equity funds as well, then these priorities will set, they will have an impact at least on the strategies that the sovereign wealth funds will have tackling the challenges of the future. Because you have mega trends in the future. If I can talk about the top three, will be the aging population, which is an extremely sensitive issue, and it does impact some investment decisions of the sovereign wealth funds. You have the urbanization, where they expect by 2020 to have some 300 million people displaced around the cities. You have, of course, the social and economic shift, if I can call it like a global tectonics, where some shifts and some powers are shifting to other places of the world. So this is if I only cite the top three challenges. So they have to take into consideration these challenges and then accordingly tailor their strategies to meet all these, taken into consideration the short-term needs, medium-term needs, and long-term needs.
Okay, thank you. I think in relation also to the theme of this conference, which focuses very much on FDI, so there is basically what I'm hearing is there's not much difference in terms of risk perception among and challenges among sovereign wealth funds and private equity, which is very similar as to what FDI decision makers also perceive. What I've heard also over the past few days, I think the opening ceremony and the opening session covered it. We've been advocating it for a number of years as well, hearing it from our corporate clients. It's transparency and predictability in policies and stability in policies. That's also basically what sovereign wealth funds and private equity funds are also experiencing as difficulties in terms of laying out their future investment strategies. And what I also see is that to go a little bit further than that is the scenarios or the trends that you just mentioned is also something what we see is creates also opportunities. They're not only challenges, but they also create opportunities for new investments, new technologies to take place. I think the cryptocurrencies also come forth out of, for instance, the financial crisis. It's not a surprise that they somehow were developed over the last 10 years or so, when we also had a major disruption in the financial crisis. So people are very creative in finding solutions to many of the challenges they face. Are there any of the panelists that would like to give some sort of a comment, a final comment, before I give the floor to the audience?
Can I just throw a curveball into this one?
Yeah, sure, Nick. Yeah.
You know, we hear about all these challenges going on, but my view is we're in a phase where we're seeing the end of capitalism in its current form. And, you know, if you look at the value that sits on this panel, I'm really the only non-fund person here, really. But if you look at the value of capital and how the banking system has depleted the store of value of that capital, so the US dollar has declined something like 95% in its value in the last 75, 80 years. You know, so there's a fundamental challenge around, you know, how value is protected generally, which is often the issue that nobody really wants to talk about. And this is why the world of cryptocurrencies is starting to become an alternative, and people are embracing an alternative cryptocurrency because they see it as a different store of value, which isn't controlled and changed by the center. So I think above everything else we've heard, I think, you know, there is a real challenge to the current capitalist model, and there's no answers yet.
Okay, thank you, Nick. Anyone else of the panelists? No. I would like to give the audience the opportunity to ask questions to one of the panelists. I think briefly stating your name, who you represent, and to whom you would like to address the question. Is the best approach. If you want to address it to all of the panelists, that's also fine. So the gentleman over there, please go ahead.
Hi, my
Can you
name's Lee Grant.
stand up, please? I think that's better for the other audience. Yeah.
My name's Lee Grant from DTMA. So Nick, the question, it's not really a question, it's a comment based on what you answered for the energy side of blockchain. You failed to actually mention about private chains and proof of stake. So here's an example, because I want people to actually understand it's not about the cost of energy. In 2014, when Bitcoin hit $1,000 for its first time, it was using $3-4 billion of energy then. We actually did a survey that another blockchain, which was proof of stake, was using $60,000 to $80,000 to do the same as Bitcoin. So when it comes down to the energy controls the value, it's not. So it's based on the use case, on where the store of value is, and what you're doing with the technology.
Thank you for the comment. Anyone would like to respond to that? Nick, would you like to respond?
Well, it's, I mean, the question that Fatima posed is that the whole crypto industry is for some time been accused of being energy inefficient. And, you know, Lee's right. I mean, there are lots of different types of crypto and lots of different types of blockchains out there, and they all have slightly different issues, not only performance issues, but their consumption of energy. So it's a really complex thing, and it's, you know, you're right in your response, is that you can't just put it all into one bucket and treat it all the same. It's all very different.
Okay, thank you.
I also,
Yes, please, Fahad. Please, go ahead, Fahad. Yes.
you know, as with any early stage technology, you know, things change. And so just like the microprocessor changed, you know, the quantum computing is going to change the way we mine. And, you know, it's going to be more efficient and more environmentally friendly. It will be forced to be more environmentally friendly. And, you know, green tech will be introduced to the blockchain. And then with green tech and blockchain, you can produce, you know, environmentally friendly cryptocurrency. And it's just a matter of time. These are all teething problems. I know the energies, you know, the amount of energy it sucks today is awful, but it's the beginning. And, you know, just like with any technology that we developed, you know, just the cars and locomotives, you know, they used to be, you know, disastrous to the environment. And today they're running on such efficiency. And so it's just a matter of time till, you know, people will have less tolerance for environmental unfriendly products, including cryptocurrency, and it will switch into something that's friendly. I think it's very good to point out that it's really damaging, but I think the future, the very near future, will start producing environmental friendly cryptocurrency using the blockchain.
Please keep me posted on that.
Yeah, you keep me posted too.
Thank you, Fahad. So it requires time to have these technologies more evolved and to be more energy efficient. There's someone over there that would like to ask a question as well.
Yes, Peter Irwin from Atos Holdings, coming more from the family office world. Following on from Nick's comment about essentially we're in a changing generation of capitalism, I think it's very, very true from the family office world as well. Prior to the crisis, you had a lot of families would just park their private wealth with a private bank and asset manager, and they'd focus on their businesses. Now, of course, there's been a major rebellion, a huge surge in family offices and multifamily offices. Wanting to do direct investments, co-invest with other families, basically get away from sort of the institutionalized component. But look, they are very, very valuable initial investors in some of the projects that maybe when they get to a larger scale and scope, would be in the sphere of a sovereign fund, of a pension fund. So my question is, what do you think is an effective way as being, say, an interface of engaging with, say, the larger private investors, family offices that normally put in that 10, that 20, that 50 million before it becomes, say, 100, 200 multi-billion-dollar deal? Thank you.
Nick, are you able to answer that?
I can, yeah, I'll have a go. Yeah. I mean, look, the thing is that I've spoken to a lot of family offices over the last 3 or 4 months, and I would say a large number of them have started dipping their toe into the world of crypto and making some investments, and they've lost their shirts. The old expression, don't invest in something you don't understand, and the world of crypto is very difficult to identify value. And so there's two sides of the coin, really. The first is there a business problem being solved and there's a strong proposition? But the second side of the coin is the technology. Why blockchain and why do you need a crypto in the first place? And actually, does it work? So, investing, whether it's institutional, high net worth, or family office, is that there is a huge piece of education required here to help these communities identify and understand the source of value, how to assess the value, how to assess the risk. Because, cryptocurrency, if you look at Bitcoin, for example, it's a fixed money supply, it's deflationary. It has a different characteristic. Supply and demand economics and Keynesian economics does not apply to the world of crypto. So the need to find a set of rules and a measure of a value to invest in, it takes some time for the community to get their head around, and it's down to education, I think. Give it time, and we can help you on your way.
Thank you, Nick. Any other questions from the audience? Yes, the gentleman there. Please go ahead.
Thank you very much. My name is David. I come from the Consul General of South Africa. I'm the CG there. My question is directed to Fatima, particularly with regard to the countries in the sub-Saharan Africa getting access to the sovereign wealth fund, so that those countries are able to fund their own infrastructure development for opportunities. Thanks.
Sorry, can you repeat the second part of your question?
Well, my second part of the question is more about access of I'm sure you're aware that in Africa we are looking at integrating the whole region through the what we call Agenda 2063, which looking at integrating the entire region from both north, east, south part of the continent. My question is on the accessibility of countries accessing the sovereign wealth fund for funding the infrastructure development.
That's a very good question. Sovereign wealth funds, the bigger ones now, like the ones belonging to this prestige club, we have seen a trend recently. They are really looking into Africa, sub-Saharan Africa, and they are looking for opportunities because the potential over there is unlimited. So now, because of their a little bit different strategy, where we see for the first time a sovereign wealth fund. I keep mentioning Norway because it's the largest. It's 1 trillion. It hit 1 trillion. and because they have a set of code of ethics and investment strategies. So we have seen them now, there were like some debates, they employed academics, to ask them their opinion about going into private equity and going Canadian in a way, and going into these immersion with a lot of potential to go and invest over there, and they got the green light for it. Africa definitely will have, in my opinion, the lion's share of these, of these investments. Now, I won't talk about, because it's not within my competencies, about geopolitical situation, what are the securities and the guarantees that you will give to those sovereign wealth funds, to say, okay, listen, you're safe, there will not be any currency problems, there will not be any currency floats, whereby, yeah, you will make 20% return, internal rate of return, and you will lose 12 on the currency. So these type of things, is that the government should sit down, the officials should sit down and say, okay, we have the potential, we have the raw material, we have the human skills, we have the set skills. How can we convince and reassure those big private equity funds who are already looking at us to say, come, and be reassured that you will have the best conditions, be it, again, currency guarantees, that they will have the outflows whenever they want and things like that.
Thank you, Fatima. Does that sort of answer your question? Yes. Okay. I think so. Anyone else from the audience that would like to ask a question? Yes, the gentleman over there.
My name is Gilbert Nkamba from Zambia. I'm representing the private sector. Some national governments buy bonds from central government to finance capital projects. But when they fail to pay the debt, this accumulates into a public debt which the citizens have to bear. Would you share your views on how public funds can be used to generate profitability but still keep an eye on sustainability? Thank you.
Who would like to tackle that very broad question? Any of the panelists? So maybe you can repeat that last part of your question, to keep an eye on sustainability, but still
maintain some profitability so that such bonds do not accrue unnecessary debt to the country.
Yeah. Okay. I mean, women have a reputation of talking too much. So shall I still answer or give the room to somebody else?
I think you're allowed to from the men on the stage, so please go ahead. I see everyone looking at me. Yes, let her go and answer that question, because I have no clue. Please go ahead.
Yeah, I mean, again, we talked about social responsible, the ESG ratings that the company should have, and their modus operandi when it comes to investments. And it's true, debt is a way of colonizing a country. So when you give a country free money, it's not actually free money, but when you give it at the beginning and then the interest starts kicking in, and then you have cumulative interest that can reach thousands%. That takes me back to my point about Islamic investments, where usury is forbidden, where you cannot take advantage of the need of the person in front of you. Now, private equities, again, because they have different strategies and they have different priorities, and they have very, very deep pockets, some of them bigger than nations, they can impose, okay, and put regulations and say, okay, now debt market is definitely dynamics and something that that happens every day. But then there should not be abuse in the debt market. It should, if it's done to provide funds and liquidities to create jobs, to create opportunities, to do investments, it is welcome and it is highly needed also in some cases. But if it's there for a hidden agenda, then they should step in and say, okay, tell us exactly what is your plan and what is your exit plan in case of that country cannot meet its obligation on that set date. I hope I answered. Good.
Okay, thank you, Fatima. Unfortunately, we're very close to the time that we need to end this session. I would like to give the panelists, the men, this time, to give the opportunity to give a final comment or a final splash in relation to what has been discussed, or if they would want to do so. Anyone from the panel? No, thank you. Thank you, everyone, for joining this session. I would like to give a very welcome applause to all the panelists for providing a lot of input. Thank you.